market, as it always does, has divided itself into two camps. There are those who are optimistic about controlling the pandemic and reviving growth, and there are those who aren't. Which camp do you fall into?
Well, I think that the real divide, Eric, is the ones who think it'll come easily and quickly, and the ones who think it'll come slowly and haltingly. And I'm in the latter category in that regard. There's a divide between the people who think that stocks are fully to highly priced today, given the economic outlook, and there are people who think that's okay because the Fed will make sure that the whole economy and all the markets levitate. And in many ways, that's the more important divide today. We all think that life will go on. There will be a return some part of the way toward normalcy. There will be a vaccine and so forth. But the big divide is the people who don't understand why stocks are where they are, and the people who do understand it by interiorizing the old motto, you can't fight the Fed. And that is I think, an even bigger divide today.
What do you think? Can you fight the Fed?
I think that the Fed has great power, but not forever. And I think that, first of all, I don't think it really, Jay Powell talked about the Fed will not have the ability to run out of ammunition. I don't know if the Fed's ammunition is really limitless. I know that the Fed can cause markets to rise and stay up as long as it buys, but I don't know if it can buy forever. We're in new territory here. Historically, the Fed has never bought corporate securities. This time around, they included corporate securities, and then they moved on to include non-investment grade corporate securities. And its buying can make these things rise, but only as long as it's buying. I think of it as kind of, we've seen these things where there's kind of a column of water and then a ball sitting on top of the water. And as long as the water's forced up, the ball stays there. Water stops, ball falls down to earth. So obviously the Fed hopes that its buying will, among other things, inject confidence into people and that they'll take over in buying. But that remains to be seen, and it remains to be seen whether that buying will be at today's levels.
Is there any reason, Howard, to expect that's going to happen? Let's just talk about the corporate bond market, but use as an analogy the 10 years that followed the financial crisis. We had QE1, 2, 3, and every time the Fed tried to pull liquidity out of the market, it seemed, investors rebelled. There was the taper tantrum. There was the fourth quarter of 2018 and other instances. Yes. Are you suggesting that the moment the Fed tries to withdraw liquidity from a market that really prices itself on solvency more than anything else, the same thing's going to happen?
I think it has to happen to some extent. This is the dilemma. Can the Fed keep it up forever? And if it doesn't keep it up forever, will prices weaken? I mean, those of us in the markets believe that stocks and bonds as well are selling at prices that they wouldn't sell at if the Fed were not the dominant force, at prices that would be determined by just the outlook for the companies. And so, number one, if the Fed were to recede, we would all take over as buyers, but I don't think at these levels. And you mentioned the difficulty of withdrawing the support. I personally believe that there is too much concern with the downside of withdrawing the support and not enough concern with the downside of never withdrawing the support. And I think that if it had been done earlier and gradually, it could have been done. And as you say, there was a bit of a temper tantrum in the fourth quarter of 18 when the interest rate on the 10-year Treasury reached 3.25. I think that was October 4th. And the market started to go down from there. So, of course, you know, the kids like candy and investors like low rates, but we have to have discipline also.